today. The best way to let us know that you are able to see and hear is to put your city and state into the chat, and that will just let us know. For audio, make sure that you click on the slides. And other than that, we'll get started in just a moment. We'll give everybody an opportunity to get in here. All right, so let me know that you're able to see and hear okay. Hey, Shannon, how are you? David, good to see you. All right, looks like some people are able to see, which is good. We'll give just a moment to make sure, hey, Julie, to make sure everybody's in here. Perfect. All right, looks like most people are able to see and hear. That's good news. So a couple of housekeeping things of which we should be aware. If you have questions today, please use the Q&A tab. You'll notice up in the kind of right-hand side up there, there is a Q&A tab. That is the best place to put questions. Everyone will be able to see your questions. So just heads up on that. Everyone will be able to see your questions. You can also upvote those questions. And when I get to answering questions, I will answer the questions with the most upvotes first. So that's the way that that works. I do have a hard stop today at 11 o'clock. Because I have another meeting that actually begins at 11. So depending on the number of questions, I don't think we're going to have that many, hopefully. But depending on the number of questions, I may or may not get to them all today. So upvote questions if they're ones that you want to hear, and I will make sure that I get to those. The chat, I don't always monitor. If I happen to notice it on the screen, then I'll see it, but I don't scroll up. I don't multitask well enough to monitor the Q&A and teach and the chat all at once. So I will monitor the Q&A, but I will not necessarily monitor the chat. You're welcome to talk amongst each other in the chat. I have no problem with that. And if it happens to be on the screen when I look, I may or may not see it. So just FYI, a couple of housekeeping things there. Other than that, welcome. We are glad that you are with us today. Just out of curiosity, let me know in the chat how many of you, hey, Jeff, what are you doing in here? I didn't even know I invited you to this one. You somehow found out I was doing another one, right? Jeff is in California, for those of you that don't know. And I teach a lot of other courses, and he's a tax professional and is in many of those other courses. So this one today is specific to churches. So the things that I teach today will also actually work for any nonprofit, but I'm going to focus on churches. So just be aware of that. All right, quick disclaimer, this is copyrighted material. Don't steal my stuff. If you don't know who I am, you can go read that, but that's boring. So here's what we're going to do today. We're going to talk a little bit about the Families First Coronavirus Response Act. This will be a review. I'm going to do it relatively quickly because we talked about this in 2020 already. But included in that is the Emergency Paid Sick Leave Act and the Emergency Family and Medical Leave Expansion Act. And I almost did not include this in today's webinar. But in the last 14 days, I have actually had two different churches in the Holston Annual Conference who have reached out to me about these issues. So these are still issues, and I decided to go ahead and put it in here. The other thing we're going to talk about is a brand new form for last year. And so some of you are familiar with it, but it's a Form 7200. We'll talk more about that. Don't worry about it right now. A notice that you should care about. We'll talk more about that. And then the biggie today that we're going to work through is the employee retention credit, because for those of us that file 941s, for those of us that file our quarterly payroll or a 944 if you file an annual payroll tax form, so especially for anyone that has any staff in addition to the pastor. Now, if you only have a clergy person, you may only have the clergy person and you are not required to file a 941 if you're not doing any withholding there. But if you have any staff in addition to the clergy person, you are required to file a 941, most likely, potentially a 944. And so the employee retention credit is going to help you. My own church, Auburn United Methodist in Reiner, which of course is a part of our annual conference. I am right on the edge. The old joke is, the cabinet kicked me as far as they could without kicking me out of the conference. I'm 4 miles from the Virginia conference, and I actually drive through the Virginia conference every day to get to my church. So, that's how close to on the line I am. And it's a great community. But we filed last week and actually got north of a $9,000 credit for fourth quarter on the 941 for 2020. So this is something that is going to help our churches. We're going to get that credit again, I think, well, certainly in quarter 1 and probably also in quarter 2 for 2021. So we'll talk more about that. That's going to be a big help to us this year. And then, of course, we're going to do some examples. And last but maybe not least, we're going to talk about the Payroll Protection Program, PPP, as it's become commonly known. And we're going to talk both about round 1 to some extent. I'm going to talk about forgiveness because many of you followed my advice last year and received round 1. And some of you went ahead and started the forgiveness process, even though I did not advise that. And so we'll talk about what the forgiveness process looks like today, which is different, by the way, than it did 48 hours ago, because we have brand new guidance from the SBA that literally came out yesterday on PPP forgiveness. And then we're also going to talk about what if you already filed and you got a less than optimal result. Are there things we can do to help fix that? So I'm going to deal with all of that today in addition to PPP round 2. It is a full agenda, so hang tight, hang in there, and we will get through it real quickly. And this is not in what I told you we're going to cover, but I just want to mention it because it is so important for our people. We do have some charitable contribution changes. So for 2020, you are probably aware that your constituents, your congregants, your parishioners are able to claim, and you yourself are able to claim a $300 basically above the line deduction if you do not itemize. So even if you're not filing a Schedule A on your 1040 or your individual tax return, you are still able to get a $300 deduction even without all that. So that's 2020. That's good news, right? Because we actually only have about 8% of our individual tax filers that are really able to itemize now after the Tax Cuts and Jobs Act increased the standard deduction so much. So again, only about 8% of our 1040s are coming in with itemized deductions. And for the most part, those are in the upper income echelons. The reason for that being that that standard deduction is a significantly smaller percentage of their overall income. So for our average taxpayers, they're not itemizing anymore. So this is good news for us that in 2020, you can get up to $300 above the line. In 2021, that actually is going to increase. And for a married filing joint return, it's going to be up to $600. So that is actually good. Now in single returns, that's going to be $300. But for married filing joint, now, this is cash contributions. This is not the in-kind stuff. You can't go donate to the Goodwill, that kind of thing. That doesn't count for this. But this is cash contributions to your church. Now, cash, I don't literally mean cash, although it can be cash, up to $250. But I'm talking about when people make their tithes to you, whatever the case, they will be able to take an above-the-line deduction in 2020 of up to $300 on a married filing joint return. In 2021, that's going to be up to $600. So that's going to help us out a little bit. Wanted to make sure that you are aware of that. We still have all of the same requirements of supplying them with a statement, and it needs to have that all-important phrase on the bottom, right? No goods or services were received in exchange, blah, 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 blah. Y'all know this, right? Okay, let's dive into the FFCRA, or the Families First Coronavirus Response Act. Again, this is going to be a bit of a review, but the Emergency Paid Sick Leave Act is something that technically expired December 31st. However, we got a brand new law that literally was signed on December 30th. We got a brand new law that now extends many of these provisions through the first quarter of 2021. So I want to briefly talk about what those provisions are and what we need to do. Paid sick time is payable to the employee if they themselves are experiencing something as a result of COVID. They're sick themselves, they had to go get a test, and for that period of time in which they are waiting on a diagnosis, 3 days, 5 days, 2 days, whatever the case may be, they are eligible for paid sick time because you don't necessarily want them coming back to work when they are pending a test, right? Or a medical professional has told them, you need to self-quarantine at home. These are scenarios that we call primary, or scenarios in which the primary person, the employee themselves, is impacted. And you can actually get up to 2 weeks of paid sick time at $511 a day. That's the max. So it's whatever they make per day, up to $511 a day. or an aggregate of $5,110 in these scenarios. We also have other scenarios, and we saw this all across the conference and all across the country, in which we had people who were caring for others, and most notably for kids, because our kids were out of school, right? The schools were closed, the daycare centers were closed, the child care centers were closed. And if that school was closed and your employee was unable to come to work because they had to stay home and care for the kid, you actually, in 2020, could pay them paid sick time for that. And in 2021, first quarter, you could pay them paid sick time for that up to the maximum. Now, in 2020, this was actually mandatory upon the employer. In 2021, it is not mandatory anymore, but the credits are still there and available. So it's the right thing to do in most cases. There are some accepted employees. That part we don't care about. But what we do care about is for full-time employees, there's up to 80 hours, or basically 2 weeks. For part-time employees, what we're going to do is we're going to take the number of hours that the employee works on average over a 2-week period, right? And if that's not easy to do, if it's not consistent, then we're going to average over a 6-month period. If they're new employees, we're going to look at what was our expectation when we hired them. Pretty simple stuff. We cannot, by the way, require them to use their regular sick days or their paid time off days. This is a primary leave, which means that this comes first. So even if they're out for 2 weeks, for example, because they went down with COVID and they're in one of those primary categories, we cannot charge their sick days for that. We have to use this credit as primary. And the good news is the government's going to reimburse us for that. So we'll talk exactly about what that looks like. I am not an attorney, so real quick, I am not providing you with labor law advice. So just be aware of that. If you happen to be in a scenario where you're in a multi-employer bargaining agreement, PEO or something like that, where you're kind of leasing employees from another organization, or they're kind of co-employees, someone else provides the W-2s, that kind of stuff, but they really work for you, that still counts, and you can still get credits here. It's a little more complex, but you can still do that. We use something called a Scheduled R to do that. And this was effective all the way back to April. So again, churches do qualify for this. And if it is one of those primary things, meaning it impacts the person themselves, it's up to $511 a day. If it's a situation where they're caring for someone else, most notably the school situation we talked about, that's going to be up to $200 a day, or $200,000 in the aggregate over a 10-day period, right, or 2-week period. But what we actually do in that case is we take their regular pay and we multiply it by 2/3, although it cannot be less than minimum wage. And we take the lesser of that, or $200 a day. So that's the way that the calculation works on that. And then we also have emergency family and medical leave. So the paid sick leave that we just talked about covers the first 2 weeks. This emergency family and medical leave is going to cover the next 10 weeks. Now, technically, the emergency family and medical leave covers a 12-week period, of which the first 2 weeks are not covered. What are they going to be covered with? They're going to be covered with, most commonly, the paid leave that we just talked about, right? So what are our calculations for this one? Well, they're almost the same. It's going to be an amount that is not less than 2/3 of an employee's regular rate of pay, not to exceed $200. And in this case, we are specifically talking about the child who is out from school or childcare, and the employee has to be home to help care for that person. So again, this is up to 12 weeks in leave in total. 2 weeks is going to come from the first credit. The next up to 10 weeks is going to come from the second credit. Next question I'm going to get from somebody is, okay, Knox, they used part of that leave in 2020, but now we have the situation again. Can we do it again in 2021? The answer is yes, as long as the total does not exceed the 12 weeks that we're talking about here. Again, labor law issues are beyond our scope. I am not a labor law attorney, but this is basically triggered when the employee is unable to work or telework due to a need for leave because their kid is out of school or out of a child care situation, right? So that is the trigger on this particular leave. By the way, stay-at-home shelter-in-place orders, if you were closed by government authorities, then that authorizes you for leave under this. Just be careful. Churches in some cases were included, in some cases were not. So that's going to depend on where you are. Were you in Tennessee? Were you in Virginia? Were you somewhere else? What does all of that look like? So just be aware of that. The other thing that we need to look at, of course, is the credit. So how are we going to get these credits, Knox, to pay us back for this? We do get credit for both the paid sick leave and the paid family leave, and the original credit applies from April 1 to December 31st, but I already mentioned to you that has been extended into the first quarter of 2021 as well. We get 100% of the qualified wages paid up to these limits that we just discussed, as well as a pro rata share of the employer's qualified health plan expenses, and it is a refundable credit. So even if it exceeds our payroll tax liability, we get a check back from the IRS, or from Treasury more specifically. So this is a good thing. And these are paid pretty quickly, 2 to 3 weeks. So updates that came about in the Consolidated Appropriations Act, that's that omnibus bill that happened right at the end of December. Again, we've extended this credit through the first quarter. And then the other thing you don't overly need to be aware of unless you happen to be in a self-employed business, I threw it in there for you. So what is this Form 7200? Well, the Form 7200 for churches that are tight on cash. So if you're in a cash flow issue, you can actually get an advance payment of these credits even before you file your 941. So you're going to use this to the extent that it exceeds your tax deposit. So for example, I have a tax deposit that is $1,000. I have credits that are going to be $1,200. Then I'm going to apply for advance payment of $200, and then I'm simply going to not send the $1,000. So that's kind of the way that that works. We use this form to do that calculation. And this is what that looks like, a Form 7200. By the way, I did provide you some handouts. So if you click on the Handouts tab, you'll probably want to download those handouts, and there's some valuable information in there for you. Notice 2020-22 is the notice that gives us the ability to not send in those payroll tax deposits and to not get a penalty, even when we don't send them in, when they're offset by one of these credits that we're talking about today. So that's an important notice to be aware of, and will allow us, once again, to not send in those tax deposits and to use that money to pay the payroll in the circumstances where these credits apply. So this is really, really helpful. We do have some guidance from the Department of Labor that tells us that we have to document these things. So basically, the way that we're going to document these things is that we're going to take a screenshot of the school website that says the school is closed. Or we're going to print out our email or take a PDF of the email that the school sent that says they're closed. Or we're going to take a newspaper clipping that says they're closed. Or we're going to take a copy of the executive order from the governor that says they're closed. We're going to get something official that says that the school or the child care center was closed, and we're going to put it in our file to back up that we legitimately offered this credit. So this responsibility is not necessarily an employee responsibility. This is an employer responsibility. So make sure if you're offering this credit, you go out there and you're in your community, you're aware if the schools are closed or whatever, but document that, put it in your file along with your 941s, your Form 7200s if applicable, and whatever the case may be, to just make sure that you are backing that up. All right, we're going to go ahead and look at our question. First question of the day comes from Jeff. What do we do differently in the payroll system, for, if anything, for these sick pay versus normal sick pay credits, family leave? And so, yeah, this is going to be different. So generally speaking, and this will depend on your payroll system, but generally speaking, most of the big payroll providers actually have the option to select an FFCRA credit. Some of them will call it an FFCRA credit. Some of them will call it a paid sick leave credit. Some of them will call it an expanded family and medical leave credit, or EFMLA credit. But there is, generally speaking, a place in the payroll provider's platform where you select those items so that they can get that correct for you in an automated way. For those of us that do payroll manually, and we have quite a few churches in this scenario, right? We tend to be small. We do our payroll on our own. We may not have a payroll provider because we're cheap, right? So we don't have a big staff. Our payroll's pretty consistent. Maybe we do this in-house. In these scenarios, you just need to track it separately. So you need to basically create a column. Hopefully you have some software that you're using or something. And that software has probably created a place in which you are able to do that. So, for example, Jeff mentioned an Intuit product. Intuit does have these options built in. Jeff, for one of the entities with which I am Associated, we actually do use QBO payroll from Intuit, and there is an option in there. You have to go turn it on a per employee basis to turn on FFCRA credits. Same with ERC credits, by the way. I'm not there yet, but I will be later in the webinar today. So good question. All right, we are going to press on, and so we're going to begin to talk a little bit about the PPP, everybody's favorite, right? But before I do that, I'm going to go ahead and launch a poll. And this poll is really simple. Did your church receive a PPP loan in 2020? Yes or no? So if you can answer that for me real quick, that will just help me to know how many people might still need a first draw PPP loan and how many people are going to be looking at a second draw. Help me to manage my time a little bit today. So did your church receive a PPP loan in 2020? And it looks like many of you did. I'm not surprised, because if you attended one of the webinars with me last year, then we certainly let you know about these options, right? And I encouraged you to do that. My own church did get a PPP loan, and it was massively helpful to us in 2020. So we would have, at Auburn, actually run a $1,200 deficit for 2020. So we came really close, but we would have been in a deficit for the first time. And because of the PPP loan, we actually were able to add to our reserve. So it was helpful, but when we took that PPP loan, we had no clue what our situation was going to be, because we did that early, right? And we had no clue what our income situation was going to be. Thankfully, our people have really responded, and we have been blessed. But we have many churches in our conference that are really hurting. And the PPP loan can make a massive, massive difference in terms of helping you out. So it looks like 84% of those that responded did get the PPP loan. About 16% of you have not yet. And the good news is you can do it now. It is reopening. So we're going to talk some about that and how we take care of that. Real quickly, a couple of questions related to the FFCRA credits before I move on. Anthony is saying, for childcare centers where 10 weeks of paid leave is not financially feasible and threatens the continued operation of the center, does the 2021 extension still include this exemption? So Anthony, the answer is basically, because in 2021, it's not mandatory for the employer. So that's the short answer. Jeff says, would regular rate of pay include historical amount of overtime? Yes, it does, because you're going to take the average over the 6-month period. So yes, it would. And Nan says, is the required 2 weeks per occurrence per year? So no, it's going to be over the total. So the 2 weeks is going to be over the total, so including the 2020 and the 2021. So good question, Nan. All right, we are going to proceed, moving here into, oh, thank you, Jeff. I just turned that on. I didn't realize it wasn't set, so thank you. All right, so the intent of the PPP is to keep persons on payroll. That's the whole intent, right? It's the payroll protection program. And if you had to lay off people financially, rehire some of those people, give you an opportunity to do that, and also pay for specific expenses that will help you keep your doors open, like rent, utilities, mortgage interest. And really staying within this intent is the key to forgiveness, right? So if you stay within the intent, if you do the things that it was intended for, if you spend the money in the ways that it was intended to be spent, you're going to get the forgiveness. It's just that simple. And we'll talk through exactly what that looks like. So who qualifies? Well, you have to have less than 500 employees. We do not have a single church in our conference for which this is an issue. Also, sole proprietors and independent contractors can qualify, but nonprofits, 501c3s only. The good news is, as a United Methodist Church, we all are 501c3s under the group ruling from General Board of, or GCFA, actually. So that group ruling has come from the IRS to GCFA, and we all are a part of that group ruling. So we all are 501c3s as United Methodist churches, and we all qualify. Yes, Becky, I will give that when I get to that. And it's different for nonprofits, by the way, so remind me when we get to that. Okay, so we're all 501c3s. If you need to pull the letter for your lender, I've given you the link there where you can go and pull that letter. And again, this is in your material. So just go to that and you can get the group ruling letter for your particular church. It's automatic on the GCFA website. So many of our churches did this last year. You will need to know your EIN number. And if you don't have one, if your EIN is stale, which happened to quite a few of our churches last year that I helped, then you need to get one from the IRS. This can be done online in most cases, but you need to get one from the IRS. So what compensation can be paid? Well, we're going to pay our employees. We cannot pay our 1099 workers. So if we incorrectly have people categorized as 1099 workers, if our organist is on a 1099, if our janitor is on a 1099, they probably shouldn't be. But we cannot utilize those 1099 workers out of our PPP money. PPP is for employees. So know that right away. If they are 1099 though, then that means they're filing a Schedule C, and they can probably apply for a PPP loan on their own. That's beyond the scope of today's webinar, but just as an FYI, you can do that, and that can help them out. So how do we calculate our average monthly payroll cost? Well, we're going to look at our 2019 average monthly payroll cost when we're looking at the when we're looking at the calculations for PPP. We're going to look at 2019. We're going to take our average monthly payroll and we're going to multiply that by 2.5. So for example, if I have $10,000 a month of average payroll, I simply multiply that by 2.5 and I have a $25,000 loan amount. Don't make it more complicated than it is. It's that simple, right? What's our average monthly payroll and multiply it by 2.5% or 2.5 times. So what is payroll? How do we define that? Well, again, it's wages, commissions, or salary. Now, we do have a few pastors in our conference that make over $100,000 and or some other employees too in a couple of churches' cases. So if you are over 100,000, we cannot count the amounts that are over 100,000. So we can only get credit for up to the 100,000. So that will impact some of our larger churches, but the majority of churches don't have that issue. And cash tips is not so much an issue here, but again, we can count that sick leave, all of that gets to be counted, and we get to count the church portion of our group healthcare benefits as well as our retirement benefits, including our UMPIP, or our United Methodist Personal Investment Plan. I also think we can include direct billed pension. Now, I will tell you that some of the lenders around the conference handled this better than others. So the reason I'm telling you I think we can include it is I think it is appropriate and should be included. Some of our lenders balked at that a little bit this last year. So just FYI, but I think it should be included, and many of the lenders did accept it. State or local tax also gets added onto here. So if you're paying unemployment or that sort of thing, most of our churches are not, but if you are, because that's optional for all of our churches. And we can also include housing allowance. So, most of our clergy have housing allowance resolutions. We do include that amount, whether it's a cash housing allowance or just a housing allowance resolution. We get to include that amount. So what are our documentation requirements? It's going to be pretty simple. We need our payroll processing records if you have those. We need our payroll tax filings, that's our 941s, and that sort of thing, potentially the W-2s. And then we're going to need our bank records, especially if we don't have a payroll provider, right? So we need to be able to prove that we're paying this payroll. That's the bottom line. What can we pay? We're going to pay our payroll. We're going to pay our mortgage payment, the interest only. If you have a mortgage, we can pay rent we have a few churches that rent their facility, and you can pay utilities, a few other things, but those are the basics. So for forgiveness, what do we get to forgive? Well, payroll cost. And there's a 24-week period that we have from the original funding date to spend the payroll. Should not be an issue for any of our churches to be able to do so. The interest on the mortgage, as I mentioned, but not the principal, the rent, and the utilities. So what do we need? Well, we need canceled checks or some kind of statement or something that's going to prove, bank statements that's going to prove that we paid for the mortgage, that details the difference between interest and principal. And then we're also going to need payroll reports, like we discussed. And we're going to need to make sure that we keep the amount of the payroll at certain levels, right? So we can't go get rid of everybody. And the comparison for forgiveness, frankly, is going to be the 941. So the 941 is a real key to much of this. Bear in mind, this is a little bit different calculation than we used to calculate the average monthly payroll in 2019, right? So if you've had changes in your staff, which many of our churches have, then you just need to make sure that you're keeping the amount of payroll no less than 75% of your pre-COVID levels. So we did have some key changes, and one of the changes that came about is that we just have to make sure that we use up to 60% of the loan on payroll. So the other 40 can all be payroll, but it can also be some of those other things. But at least 60% of it has to be payroll. There was initially it was at 75 for the percentage that had to be payroll, but that is now 60. And then the other thing to be aware of is that the payments will begin 10 months after the last day of the covered period. Now remember, the covered period is up to 24 weeks from the date of the origination. So you have 10 months after that before a payment would start, which means none of our churches are actually in that payment phase yet. Okay, so don't be panicking if you haven't filed your forgiveness yet. We're going to talk about that. There are religious protections out there. I don't want anybody to overly freak out about that. And then we also got some new updates in this new law. We have some additional eligible expenses, and we can include covered property damage costs if you happen to have damaged property related to riots. So, you know, if you had a Black Lives Matter sign that was stolen and they created some grief, or if you had graffiti from a riot or broken windows, or, you know, any of that sort of thing, that's included. And then also covered supplier costs. And then the biggie is we can include worker protection. So PPE, hand sanitizer, those kinds of things that are used for our employees, we can include that. In addition to that, we can use operations expenditure, such as if you have payroll processing expenses, we can now include that. That was not originally in, but now we can include that. So that's a recent change. And then also if you purchased any software for payroll, those or accounting, those sorts of things can be included as well. And the good news on forgiveness, we have a simplified application for forgiveness. I have provided this for you in your handouts, and it is for all of us who received up to $150,000 in our loan. And that is most of our churches were $150,000 or less, not all, but most of our churches were $150,000 or less. This is the total of the forgiveness application. It is a one-pager with some instructions behind it, but this is the total, sum total of it. You're simply going to put your name of your church, business address, contact information. Then you're going to put in some information about the loan, the number of employees that you had at the time of the application that you put on your original application, and the number of employees that you have at the time when you filed for forgiveness. Hopefully it's the same, by the way, or very close. Then you're going to put in the dates for your covered period. Remember, that's either an 8-week period or a 24-week period. I recommend the 24-week period in almost all cases for our churches, except for those that had daycares that shut down or something like that, where an 8-week period makes sense because of employee count. But for most of our churches, I recommend the 24-week period because then you have no worries about using up the whole amount. And then you're going to put the amount of the loan that you spent on payroll costs. And then you're going to put the requested loan forgiveness amount, which is going to be the total amount of the loan. And none of you have a loan over $2 million, so you don't have to check that box. And then you're simply going to initial the next two lines. The first one saying, I did what I was supposed to do and spent these funds the way that I was supposed to spend them. And the second one saying, I didn't commit fraud. Then you're going to sign it, date it, print your name and your title. So church treasurer, church finance chair, church administrative board chair, you know, whoever it is, financial secretary, whoever it is that is board of trustees chair, whoever it is that signed the initial application, in theory, should probably also sign this one, although that is not a requirement. That is the sum total of the forgiveness application as of yesterday. You do not have to submit any documentation, though you do need to keep the documentation on in your files in case you get selected for an audit. But that's very anticipated to be very, very rare on loans under $150,000. This is nothing to sweat whatsoever. You simply fill out this form, you send it to your lender, and they, within 60 days, provide you, hey, good news, the SBA has forgiven you. My church, Auburn, we received our forgiveness last week. we filled out, I had an early version of this form, and we filled out a similar form, and we got our forgiveness taken care of last week. It does not have to be something to stress out over, okay? This is pretty simple, and this is the reason, for those of you that reached out and asked me, that I said wait, because there's something better coming down the pike. Don't freak out about forgiveness. You have time. Wait. So for those of you that followed that advice, this is the form. Very, very simple. And you simply utilize this, and you don't need to sweat at all. So that is, for almost all of us, good news, right? So we also have some additional changes to be aware of that are good news for us, and that is we get a second draw loan. So the second draw loan is only going to be for those churches or nonprofits that had a 25% reduction in gross receipts for any quarter in 2020 compared to the corresponding quarter in 2019, in most cases, a couple of exceptions to that. So this is why Becky is saying, can you give me a definition of gross receipts, right? Because how do we determine what is a 25% reduction in gross receipts? Well, good news or bad news, depending on your perspective. We got specific guidance for nonprofits, and that guidance actually came out yesterday, literally on January 19th. If you're watching the recording, we're recording this on the 20th. So it came out on January 19th. And that guidance tells us that gross revenue for nonprofits includes everything except for an EIDL, an economic injury disaster loan advance, if you got that, and except for PPP forgiveness if you've already been granted that. And then obviously loans do not count. So the PPP loan, that revenue per se is actually a liability until it is forgiven. Same with an EIDL loan. That is a liability until it is forgiven. But even if the EIDL is not forgivable, but even if your PPP has already been forgiven, you do not have to include that in gross revenue. But everything else counts. So Becky, this means that our designated giving all counts as a part of our gross revenue. For those of us that have a building fund or a capital campaign, or money that we collect and send for special Sunday offerings, or fill in the blank. It is all a part of gross revenue in this new rule. What this means is that some of our churches will qualify for this because they're really hurting. Many of our churches will not. My church will not qualify for this. And that's okay, because there are some other things that we will qualify for that I'm going to talk about in a minute. But for those of you that do have this 25% reduction in gross revenue or in gross receipts, then this is going to be helpful for you. And what you're going to do is you're going to take the first, second, or third, or fourth quarter of 2020, and you're going to compare it to the corresponding quarter in 2019. So for example, quarter 4 2019 versus quarter 4 2020. This is one in which I've heard a lot of churches tell me, Knox, we didn't get the December bump that we often get, or we didn't get the fourth quarter bump that we often get, and we are down 25%. Or I've heard some churches tell me we're down 25% in second quarter, kind of back when we first felt the full impact of this. And, we weren't meeting in person, and people were holding their funds and then gave them when we came back to in person, if that's happened yet. So you may have a quarter in which you are down 25%. Auburn does not, where I serve, and I feel thankful for that. So actually, we don't qualify, but the intent of this from Congress's perspective is to put this money in the hands of the people that need it the most. However, like I said, there are some other options that are going to help our churches. And so don't panic yet. There are other options. Real quickly, if you'll just answer my next polling question, does your church file 941s? Yes or no? That will help me out a little bit. So these 941s are the quarterly payroll tax forms. Basically, if you have any staff other than the pastor, you probably file a 941. Some of you file a 941 even if you only have a pastor, but it's optional if the pastor's your only employee. All right, so far it looks like the vast majority of you do, which is good. in terms of qualifying for some of this help. So that's good news. All right, a couple of questions that we're going to look at real quick. If a church has money in savings, can they still get a PPP loan? Yes, Linda. So the amount that we have in reserves is totally not an issue for your ability to qualify for PPP, right? Totally not an issue. So if you have money in the foundation, if you have money in your checking account, savings accounts, it's a non-issue. We don't look at assets. We simply look at revenue when we're looking at PPP round 2. Now for PPP round 1, there's actually no requirement whatsoever in terms of this 25% reduction or whatever. So if you had not yet received PPP round 1, sorry, the sun's moving on me, but if you had not yet received PPP round 1, you can go back and apply for PPP round 1 now. But for PPP round 2, that is going to require this 25% reduction in our gross receipts or our gross revenue. So yeah, the number of assets or the amount of assets that we have is a non-issue. So what do we have in savings? What do we have in reserves? A non-issue. Jeff, to answer your question, they will qualify for ERC. I'm not going to go any deeper than that on this particular webinar. All right, so requirement expense, yes, you are right about that. In terms of the calculation on retirement, we're going to divide by 12, multiply by 2.5. That's correct. What if we had a significant decrease in the amount of employees, but not in the total amount of payroll paid? So Nancy, that could be an issue for you because there is a requirement that you maintain 75% of the number of employees. So there are some exceptions, and those exceptions are basically, you know, we offered the employee the job back, but they wouldn't come back. Document that. Or, you know, the employee left and we were unable to find someone of comparable skill level. Document that. But for the most part, you need to maintain 75%. Can I elaborate on used or will use round 1 funds to qualify for round 2? What are the rules for will use? Yeah, so Jeff, because round 1 is reopened, right? You can actually apply for round 1 and turn around and apply for round 2 right behind it. Get both of them in these first 2 quarters of 2021. And so long as your intention is to use it and get forgiveness for round 1, then you can apply for round 2. So you can do them back to back. That's the reason for that will use terminology. We received the max PPP and the 10,000 EIDL, Anthony says, must have overlapped in processing. To whom does the overage go back on the forgiveness process? So Anthony, great question. And this is a change. So up until this month, the SBA was requiring, if you got that up to $10,000 EIDL advance or grant, right, that amount be reduced from the forgiveness. And those of you that went ahead and applied for forgiveness, again, against my advice, but those of you that went ahead and applied for forgiveness, you were shorted that $10,000. The good news is you no longer have to be shorted that $10,000. So if you apply for that forgiveness today, utilizing the form that I recommended, or even the long form, then you do not have to get shorted that. You get that 10 grand in your case in addition to the PPP. So there's no change there. The good news for those of you that did jump the gun and went ahead and did that, there's going to be a procedure to get you those funds back, even or to forgive the loan at that up to 10 grand for the EIDL. I don't yet have that procedure nailed down, because the SBA hasn't released it. They should release information on that before the end of the month. What if our bank is a credit union, does not offer PPP? Can we use another bank? Yes, Linda, you can use another bank. If the church operates a thrift store, are those receipts included in the calculation? Patrick, it all depends on the taxpayer ID number. So is the thrift store a separate, which it should be, hopefully, but is the thrift store a separate legal entity? Did you create, for example, a separate nonprofit and the thrift store has its own board? Or is that thrift store operating under your church? And if the answer is that it's separate, then it is separate. But if it is operating under your taxpayer ID number, then it is going to be included in your gross receipts. So I am a big fan of segregating things like that can create liability, by the way. So for those of you that do have a thrift store or even a daycare, for the most part, I am a fan of segregating those into separate legal entities. Segregate that liability and segregate that payroll into a separate legal entity will save you, for the most part, trouble down the road. As a final rule, or the full-time equivalents based on 30 hours per week or 40 hours per week. In April, the guidance was 30. It did change to 40, Anthony, so it is based on 40. 25% reduction for PPP, 20% for ERC. That's why I was so confused. Jeff, don't confuse my people. I haven't gotten to ERC yet, but yes, that's correct. Sale of office furniture, equipment proceeds does not count as gross receipts. Wrong. So the guidance we got yesterday actually said that if you sell assets, the profit from that, the receipts from that actually does count in gross receipts for a nonprofit. I don't agree with that, but that's the SBA guidance. And so I mean, it is really extensive for a nonprofit, more so than for regular businesses. But for a nonprofit, it is basically everything that you deposit into your bank account, everything, with the exception of any sort of loans that you got or forgiveness for either the PPP or the EIDL grant. Everything else is counted in your gross receipts or gross revenue for a nonprofit. PPP1 will be following the 2020 original rules or the 2021 rules. A combination of both, Jeff. It's going to follow the 2020 rules with some changes. And so actually I included in your handouts today the new application that actually came out on the 11th, so a week ago. But we have a new application for PPP Round 1 and a new application for PPP Round 2. Again, I've included that in your handouts, and so you have that information here. Will we be allowed to clarify why the amount of employees decreased by more than 25%, or will we be automatically denied forgiveness? So, yes, Nancy, in that case, you will not be able to use the short form that I described, right, if your employees decreased. And you'll have to use the longer form if you have one of the exceptions that we talked about. If the second round puts a church over the 150, would that change which application is used for forgiveness? Yes, it would, Beth. So I don't think I included, but there is it's a form 3508. I can send it to you if you email me. Pretty sure you have my email, Beth. And it just means that you have to provide documentation. But you're still going to get the forgiveness. No big deal as long as you follow all of the stuff, right? So under 150, we don't have to provide documentation. It's a one-pager. Over 150, we have to provide documentation. So, for example, the annual conference, Holston Conference, applied for PPP Round 1. And we obviously were over 150,000, right? So that application for the annual conference, we have to fill out the long form. I say we because thankfully it's not me, right? That's Rick and his staff, and actually another of our pastors in the conference, Greg Bostic, is helping in that process as well. But that has to be the long form. But for many of our churches, we're at the 150 or under, and so you can use the short form for that. Nan says, how does the qualified sick leave claimed on the 941 impact PPP? Great question. So the bottom line is you can't double dip for the same wages. But again, we have a 24-week period to use the wages, right? So if you had paid sick leave covering even 12 weeks between paid sick leave and paid family leave, there's still 12 weeks left. You should be able to get your payroll in, right? So you just cannot double dip. That's the bottom line. You cannot use the same wages and receive multiple credits and or forgiveness for the same wages. Great question from my wife. Hey, Paige. She says, if we have continued to pay tithes during the pandemic, do we have to send 10% of our PPP loan amount to the conference? Great question. I'm glad you asked this, sweetie. So a loan is a liability, and we do not tithe on a liability. However, the moment at which the loan is forgiven, it becomes income, and we do tithe on the income. So, for example, at Auburn, we received a PPP loan, right, in 2020. We did not receive forgiveness until 2021. So we did not tithe on the loan in 2020. We received forgiveness this month, and this month it will be on our tithe report to the conference. My treasurer and I actually had that conversation last week. So yes, it will be on our tithe report this month. Now, this is a wonderful thing, right? Because we're basically tithing 10% of the income, but not until we recognize it as income. And we don't recognize it as income until the point it is forgiven. And I recommend you put it on your P&L as other income. So that is the point at which we recognize it on our tithe reports to the conference. Great, great question. ERC versus SSA deferral versus, all right, let me hold off on that question because I haven't gotten to ERC yet. That's coming, Anthony, so let me hold off on that. So proceeds from sale of a parsonage are included in gross receipts. Does it matter that the proceeds were segregated to use towards housing payments for a pastor? What about the proceeds of the sale of contents of a parsonage? So Clifford, or Barry, yeah, bad news. Under the SBA guidance, it is all included in your gross receipts. And so at least for that quarter, you're not going to have a 25% reduction. The good news is it's a quarter by quarter calculation. So you may still have a quarter in 2020 in which you did have a 25% reduction, depending on how things are going in your church, right? So, but that's the short answer. Short answer is it does get included in gross receipts. But again, we're looking at this quarter by quarter. So we're taking fourth quarter 2020 versus fourth quarter 2019. Third quarter 2020 versus third quarter 2019, right? So we're segregating each quarter. And if any of the quarters in 2020 saw a 25% reduction from the corresponding quarter in 2019, then we qualify for PPP round 2. At Auburn, that is not the case for us, but in many of our churches, it may well be. Can we choose to apply for 150 even if it's 2.5 times our payroll amount is more? So the real question here, Kate, is can we choose a loan amount that is less than the maximum amount we qualify for? And the answer to that is yes, but I don't recommend that you do that. I recommend that you get the most help you can get. It's not a huge hurdle to just document that you did it correctly, right? So it's still not something to stress out about. It's just really not something to stress out about for our churches that are under 150, many of which are using volunteer treasurers, and this is very stressful already, right? And so I wanted to clarify that it's really easy for these smaller churches. But I don't think that, I'm not at all suggesting that you reduce your potential help from the government. We don't know what the year ahead brings. You know, in our own denomination, we have issues beyond even just COVID that are likely to approach in the next year or two. Get the help that you can get is my recommendation. Hugh is asking, will the PPP loan forgiveness be taxable on your 1040? No, it is not, Hugh. A little beyond the scope of today, but the answer is no. All right, we are going to, so Glenda says, what if monies were contributed in 2020 for 2021 for pledges? Basically, it's cash basis. So what that means is you deposited it in 2020, you received it in 2020, it's going to count in fourth quarter 2020 because you're going to show bank statements basically to prove this, right? So it's cash basis. So that's the short answer there. All right, we are going to press on here and talk a little bit about this second draw. It's up to $2 million. That's not an issue for any of our churches. None of ours would be over that. For this one, you cannot employ more than 300 employees per location. It was 500 for the first one. But again, I don't think we have any churches in our conference for whom that's an issue. And you have to have used or will use, as Jeff already mentioned, the full amount of the first PPP loan. So what are our loan terms on this? Well, it's going to be for our loan amount up to 2.5 times our average monthly payroll cost for the year prior to the loan or the calendar year. So again, for that first draw, it was pretty much 2019, right? But for the second draw, it's going to be 2020 in most cases. So just be aware of that, a little bit different there. And none of you are going to qualify for this as a church, but restaurants, hotels, and other hospitality type businesses actually get 3.5 times. It's not going to help you for the church. So if you go hear from somebody, hey, the new loan is 3.5 times, it's not for churches. It's going to be 2.5. And again, payroll costs have got to be at least 60%. The rest pretty much matches round one that we talked about. All right, we are going to move into the employee retention credit. And I'll tell you, I'm pretty excited about the impact of this credit for our churches. For all of our churches that have more than just the pastor as an employee, you need to perk up. Because every one of our churches that has more than just the pastor as an employee is going to qualify for the employee retention credit. Every one of our churches that has more than just the clergy person as an employee is going to qualify for this. So basically, if you file a 941, you're going to qualify for this. So pay attention. Now, that's not true for every business, but it is going to be true for us. We'll talk about why. First of all, this is a refundable credit. That's good news because it means that even if it exceeds our payroll tax deposits, we get money back. That's going to be good news, right? 50% of our qualified wages in each quarter for 2020. Right now, we're talking about 2020. We're going to talk about 2021 in a minute. But for 2020, this is a credit for 50% of qualified wages in each quarter, up to $10,000 per employee in wages. So 50% of $10,000 is a $5,000 credit, right? So our maximum credit for 2020 per employee is $5,000. Now, for those of us that have lots of employees, Rick, perk up your ears here, right? For those of us that have lots of employees, this could be a pretty good sized credit in 2020. So pay attention here. Who are our eligible employees? Well, our employers. It's anyone who was carrying on trade or business in 2020. We're good to go so far, right? We were carrying on our business in 2020. And in any calendar quarter, we had our operation fully or partially suspended by governmental order. Every one of us in the conference at some point had our operations either fully or partially suspended by governor order. So I'm in Virginia, and we had all the way back from April 14th was our executive order date that basically said that we were shut down, right? That we were basically shut down for a while. Then we were enabled to open, but only up to 50% in capacity. That counts as a partially suspended. So, and we are still under that order. So for all of you that are in Virginia, where my church is located, so I know it a little better, but Tennessee had similar things, right? You just have to pay attention to what was the specific order in your area. Your dates are going to be different, and your guidelines are going to be different. In some cases in Tennessee, it varied from county to county and even city to city. But all of us at some point were under a government order that at least partially suspended. Now, I want to be clear here. I'm not talking about a bishop's order. I'm not talking about a cabinet order. I'm not talking about an order from any church entity. I'm not talking about a board of trustees order or a church council order. I am talking about a governmental order, okay? But if we had any calendar quarter in which we had a governmental order that either fully shut us down or partially shut us down for in-person, meeting in person in worship, then we were shut down. The same is true if you operated a daycare. If you had a government order that shut you down, the same is true if you operated a thrift store and you had a government order that shut you down or partially suspended you. You're following the pattern here? If you were and by the way, if you are as one entity and any portion of you was shut down, then you are considered shut down in total for the entity. That's considered a partial suspension. So if you did operate a thrift store, your thrift store was shut down, but you could still worship, you were partially suspended, or vice versa. You follow me? Every church in our conference has been at least partially suspended. There's also another way that we can qualify for this, and that is the significant decline in gross receipts. So how do we define that? This is if we had a 50% reduction. Again, we're talking about 2020. The rules are going to change for 2021. We'll talk about that in a minute. But in 2020, if we had a 50% reduction in any quarter related to the corresponding quarter. So some of us did have a 50% reduction. Thankfully, not my church, but we did have some churches that saw a 50% reduction in quarter two. Again, churches where online giving didn't quite take off just as quickly, or people weren't mailing them in. They were waiting to come back, holding those together, and then made, a big, hopefully, deposit of their tithes and offerings when they came back. So we did have that in some of our churches. If you had a quarter in which you had 50% of gross receipts or less, then that also qualifies you. And that's going to end the quarter after you breach the 80% mark, which means that if you fell below 50%, you automatically get at least 2 quarters, because you get at least the quarter you were at 50% plus the next quarter, even if you got above 80% the next quarter. So you're going to automatically get half the year, right, as potentially, or 2 of the 4 quarters. So again, this is the way that we're going to calculate that. Tax-exempt organizations are eligible. This actually includes all 501c, so not just C3s. So those of you that are on the board of food pantries or some of our other associations, Jeff asked a question about some national associations. Those are going to qualify, even 501c6s, whatever the case may be, 501c4s. All of the 501cs qualify for the employee retention credit. That's not necessarily true for PPP, but it is true for the employee retention credit. Wage calculation will vary on whether or not you had less than 100 employees or more than 100 employees. Most of our churches are less than 100 employees, but let's talk about this. If you had more than 100 employees, then we only get the credit for the employees that were not providing services. But if we are at less than 100 employees, we get a credit for all employees, regardless of whether they're working or not, right? So in my church, for example, we are at less than 100 employees by far. We have 3 of us. So we are far less than 100 employees, right? In my church, all employees count. In most of our churches, all employees count. We do have a couple of situations in the conference where we may have more than 100 employees. And if you have more than 100 employees, again, hopefully you segregated out things like the daycare, stuff like that. It's going to help you now if you did. But if you didn't, you have to count it as whatever the entity is, right? So if you're over 100, then only the employees that are not providing services are you going to get the credit for. FFCRA benefits are excluded. What does that mean? It means you cannot double dip. And I already talked about the aggregation rules a little bit. I've given you the sections of the tax code if you need to go look that up or have your CPA look that up. Third-party payers are specifically allowed, much like we talked about before. We don't have employer size limitations here, and this is not going to be an issue for us, but self-employed individuals are not eligible in this case. So just be aware, again, this will only give you credit for employees. Your 1099 workers that probably should be employees anyway, you're not going to get any credit for. And in this case, they cannot go get this credit on their own. Household employers also not eligible. So what are orders from an appropriate government authority? This is not a press conference. This is not an interview with the media. This is an order, right? And it must limit commerce, travel, or group meetings, and it must impact your operation of business. In our case, we're a church. It's going to impact worship, or it's going to impact our daycare. It's going to impact our thrift store. It's going to impact some portion of our operation or business. Let's do an example. Governor of state, whatever, issues an order that all non-essential businesses must close from March 20 to April 30. He lists what essential businesses are, what non-essential businesses are. So the employers that provide essential services are able to remain open. Well, this then would be a governmental order for the non-essential businesses that would qualify them, but not for the essential businesses because it did not impact their business. Does that make sense? So you have to be impacted. Let's look at another example. A mayor goes out and holds a press conference and says, everybody be good and socially distance and wear your mask. Does that count as a government order? No, that's just the mayor out there saying, please do so, right? What about if we have a local health department that closes us due to a health code violation that's unrelated to COVID? No, that has nothing to do with COVID. And so that's not going to be considered. What about if we voluntarily suspend operations, including the bishop telling us to, by the way? That does not count, right? So we have to pay attention to what is the date of the actual order from the governmental authority that at least partially suspended us. Again, in Virginia, for those of you in Virginia, it's going to be April 14th. And yep. Now, bear in mind that even if you don't qualify by governmental order, you may qualify by the significant decline in gross receipts. So there are two different ways to get in. In Auburn's case, thankfully, we never had a significant decline in gross receipts as defined in 2020. And so, you know, we don't get in that way, but we do get in by the executive order. And even though we just have 3 little employees, we're a small church, you know, we got part-time employees, but nonetheless, we got a credit that was greater than $9,000 on the 941 we just filed for fourth quarter. So this can be a significant credit for our church. $9,000 is a lot of money, right? So this can be significant for us. So if you are unable to carry on your operations, but you're able to telework, oops, I got a little click happy there, but you're able to totally telework, can you claim the ERC? This is an interesting question, right? And the answer is basically no. However, if your business's operations were partially suspended, then you do get to claim it. So in our case, even though we may have done online worship and may have teleworked to do some of that, we were not able to fully operate. We were partially suspended, so we are going to qualify as churches. What about if, and this kind of goes to that impact, right? So like a restaurant, drive-thru is open, dining room is closed, that's by governmental order, they still qualify because the dining room is closed. So that's similar for us, right? We have online worship, but we're not able to have in-person worship, or not to the full extent. We're limited in capacity, whatever the case may be. We're partially suspended, and so we do qualify. All right, the other thing that we want to look at is what if you have multiple locations? We have a couple of churches in the conference that have multiple campuses. If you had a single campus that was closed by governmental order, the entire organization qualifies because you're treated as one entity under the aggregation rules. So that only impacts 1 or 2 churches in our conference, but I did want to throw that in there because that may be helpful there. So the other thing to be aware of is that it only benefits us for the time period in which we had the governmental order to shut down, if we qualify by that method. Now, the gross receipts, we get the whole quarter. But if we qualify by governmental order, then it's only the payroll that existed in the time period of the governmental order. So I mentioned here in Virginia, that was April 14th. So I cannot count the entire second quarter, which began on April 1. I have to start counting payroll on April 14th. Does that make sense? Lisa's asking, do fundraising dollars count as gross receipts? Yes, they do for nonprofits. All right, let me grab a couple of questions real quick, and then I will come back to this. Yep, cash basis for gross receipts required by statute. Yes, Jeff, it is. Well, actually, by SBA rule, but yes. Never heard before to use 2020 rather than 2019 for depressed revenues is an option to use 2019. So, Jeff, don't misunderstand me. Depressed revenues is a different question than calculating payroll. Okay, so wait just a minute because I'm going to talk about some options for ERC, but you're going to basically use the corresponding quarter of the previous year. There is an exception where you can actually use the previous quarter. So for example, if 2020 quarter 1 shows a 25% reduction from fourth quarter 2020, that's going to qualify you for the purposes of ERC. If there's a 20% reduction, and I think I said 25, but I meant 20 for ERC. If there's a 20% reduction, because, well, I haven't got there, don't confuse everybody, but in 2021, the reduction becomes 20% instead of 50%. So that's kind of where Jeff is going. All right, let me press on ahead here. So additional questions to ask. If we got the Paycheck Protection Program, can we still get the employee retention credit? And the answer, yes. Now, this is different than what it was prior to the new law. So I told you the last time we met last year that if you get the PPP, you don't qualify for the ERC. That changed, which is why Auburn included it on our fourth quarter 941, right? We did not claim it throughout the year, but we did claim it on our fourth quarter 941 because the law just changed and opened it up for us. The next question somebody's going to ask is, but Knox, I already filed my fourth quarter 941. can I go back and get these credits? The answer is yes. There's something called a 941X, which is an amended 941. And you're going to use that form in order to claim this credit for 2020 if you have already filed the fourth quarter 941. Now, if you have filed the fourth quarter if you have not filed the fourth quarter 941, you're going to claim this credit on the fourth quarter 941. And that is what I recommend you do if you haven't already filed. They're not due yet, so you may not have. But the tax deposits were due, so you may have. All right, so employers receive both paid family and medical leave credit and employee retention credit. Yes, you just can't double down. So we're seeing a similar theme here, right? Now, we do have some CARES Act changes, or some changes actually from the Consolidated Appropriations Act that go back to the CARES Act date. The first of which is we are able to take ERC with the PPP. So, Nan, to answer your question, yes, we can take ERC with PPP. We just cannot use the same wages. So, for example, at Auburn, when we filed our 941 last week for fourth quarter, I sat down with our treasurer. We rolled out a spreadsheet for each employee. And we said, okay, this period to this period was included in PPP. And then we rolled out and we said, we can include this period to this period under governmental order that was prior to the PPP. And then we can include this period to this period that was post PPP that is included in the governmental order, right? And remember, you're going to go up to a maximum of 10,000 per employee. So for the entire year in 2020. So for full-time employees, they're all going to reach that maximum, even if you had PPP. It's your part-timers, you have to sort of run the calculation, right? All right, so you cannot use it for forgiven wages. By the way, group health insurance can be considered a part of gross wages. In 2020, I don't think this really helps us much because you're going to reach that $10,000 maximum anyway, which means a $5,000 max credit. So it's not going to make a big difference unless you have very part-time workers that are qualifying for group health, which would be highly unusual. So for the most part, it's a non-issue. But we also now get to claim this through July 1. Translation, we get to claim it quarter 1 and quarter 2 of 2021 as well. And it's better for 2021 because in 2021, we now get $10,000 per employee per quarter of wages. So remember, it was $10,000 for all of 2020 annual in aggregate. Now, and we get to claim that, but now when we come into 2021, we're going to get up to $10,000 in wages in first quarter and potentially up to $10,000 in wages in second quarter, depending on if you meet the requirements. The credit is also better. So in 2020, the credit was 50%. In 2021, the credit is 70%. Translation of this, 70% times $10,000 per quarter, we have potentially $7,000 per employee per quarter credit here, which is significant, right? So even for our churches that are not going to qualify for PPP round 2, we could, for our full-time employees, potentially, if you otherwise qualify, get a credit of up to $14,000 per employee in 2021. That's huge. The gross receipts test is also different. It was 50% to qualify in a quarter in 2020. Now it's 80%. So again, we're going to look at the corresponding quarter in 2019. However, there is an exception that allows us to choose an election for the preceding calendar quarter. So just as I just mentioned to Jeff in answering his question a few minutes ago, if our quarter 1 is down 20% over our quarter 4, this may be true in our churches that saw a quarter 4 bump. We could see a reduction of 20% in our gross receipts in 2021 quarter 1. And if you do, then you qualify by the gross receipts reduction test because it's only 20%. And then you qualify for this nice credit. Again, all tax-exempt organizations are eligible. And so let's go through a couple of examples. This is going to help us out a little bit. So Church A, right? We're going to look at a 2020 example, and then we're going to look at a 2021 example. Church A has 2 full-time employees. We're going to use simple math. So each is at $4,000 a month. And then we also have 3 part-time employees. You know, I've got an organist, I've got a custodian, I've got a secretary, whatever the case may be, right? music director, whatever. I've got 3 part-time employees and 2 full-time employees. My total average monthly payroll is 10 grand. Now, we're going to assume that they're impacted by virtue of an executive order, but they also, in this case, are going to qualify because their revenue is down by at least 50% in both quarter 2 and quarter 3. And in quarter 4, they got back above 80%. We unfortunately have a few churches in this scenario. So the first question is, how many quarters, just based on the gross receipts test, how many quarters does this church qualify for the ERC? So just tell me in the chat real quick, how many quarters does this church qualify for the ERC just based on the gross receipts test? All right. By the way, Glenda is saying, what if some of the PPP funds were put into savings from the first loan forgiven or not forgiven yet? Yeah, where you put them really doesn't matter, Glenda, so long as you spent the money. So, you spent the money in payroll over a 24-week period, or the other options, at least 60% on payroll, you spent some rent, some utilities, whatever. You spent the money in a 24-week period, it's fine. It's semantics of what account you put it in. Yeah, so Hugh and Brian and David are all correct. It is 3 quarters because they qualified for quarter 2, they qualified for quarter 3, and they qualify for quarter 4. Even though they're back to the 80%, they still qualify for quarter 4. It would be the next quarter that they potentially don't qualify for, right? So they're going to get 3 quarters here, even by virtue of the gross receipts test. So what are the options that this church might have had? Well, they could have applied for the EIDL grant, which was up to $1,000 per employee. This church had 5 employees, 2 full-timers, 3 part-timers. That's 5 employees. They would have received a $5,000 grant. Now, it's too late to do that, but they could have if they did it early on. They could have received an EIDL loan, and at least initially, that was up to $2 million. That got pretty quickly lowered to $150,000 max. But we have a few of our churches that did get an EIDL loan. I did not recommend it in most cases because the EIDL loan is not forgiven money. Although it's a great interest rate, it's not forgiven money. So unless a church really needed it, I didn't recommend this. But some of our churches did it. And then the PPP, which I did recommend for most of our churches last year, 2.5 times the average monthly payroll. Their average monthly payroll was 10 grand, so that would have been 25 grand. And then there's the employee retention credit. So let's look at the math real quick. Remember that I said that you get up to, in 2020, $10,000 per employee in wages for the year, and the credit is 50%. So 10,000 times 50% means we have a maximum credit of $5,000 per employee. The 2 full-timers will exceed in the 9 months that they get credit for, 3 months and a quarter times 3 quarters is 9 months. They will exceed the 10,000, right? So they're going to get the 5,000 each. There's 2 of them, so that's 10,000. That's the first calculation. Then we're going to look at the part-timers. Well, we know that our average monthly payroll is 10 grand, and we know that there are 2 full-timers, each of which are at 4. So that means that 8 grand of that average monthly payroll is taken up by full-timers, which means there's a remaining 2 grand split between the part-timers. We're going to assume, since I didn't tell you otherwise, that it's split fairly equally. So we're going to take that 2 grand, we're going to multiply it by the 9 months, and then we're going to multiply that by 50%. And then that is going to give us 9 grand, right? 2 times 9 is 18, times 50% is 9 grand. So we take our 10 grand from the first part, our 9 grand from the second part, and our employee retention credit for this church is 19 grand. So what is the total amount of help? Free help, essentially, in terms of cost to the church, that the church could have received from the government. They could have received the 5 grand grant, which was totally, it's a grant, so they don't have to pay that back. Now, I'm not going to count the loan because that is a loan and that does have to be paid back. The PPP, they would have been eligible for $25,000 in forgiveness. So far, this church has received $30,000 in help. And now they're going to go ahead and file for the employee retention credit for an additional $19,000 in credit. So this church could have received, if they took advantage of all of these options, good for them. They had someone who attended one of my webinars, right? And they got $49,000 in help. This is a relatively small church with an average monthly payroll of 10 grand that could have received $49,000 in government assistance towards payroll. That's massive. That is 4.5, nearly 5 months worth of payroll. Huge, absolutely huge for this church, right? So Nan says, so if we got PPP1, it's forgiven. Should I file an amended 941 for quarters 2 and 3? Or are we bound for the original rule of no ERC for PPP? So you're not bound for the original rule. And the answer is that you can actually claim for all of the quarters on your quarter 4 941. There's an exception that if you are claiming because of the law changing, then that is why. Paige, to answer your question, Trish is also logged in under your name. All right. So that is 2020. Now we're going to look at 2021, and then I'm going to get back to questions. Now, they could have also had a delay of payment of employer payroll taxes, but of course, that's not free money. So lots of money that could have helped this church. Now we're going to look at the same church in 2021. Exact same church, 2 full-time employees, each at $4 grand a month, 3 part-time employees. Average monthly payroll is still 10 grand. We're going to assume that they're impacted, and their revenue is down by at least 50% in quarter 1 and quarter 2. They're back up to 80% in quarter 3. Same scenario, basically, right? What are our options in 2021? Well, they could now go out and take the EIDL loan. That's back open. But again, I don't recommend it unless you absolutely need it, because that will not be forgiven money. They can go get PPP round 2, which is $25,000. By the way, if they never got round 1, they can go apply for round 1 and round 2 now. Both are back open. But in this case, they did in 2020. So they're going to get the $25,000 for this, and there's the employee retention credit. Now, let me disclose here that you cannot double dip in wages. And in this particular scenario, there would likely be a place where we might double dip in wages. And so I'm not taking that into account, just to sort of simplify the math here. But we can't double dip in wages. So we're going to run a calculation to see what's going to make the most sense for us. Is it ERC? Is it PPP? Is it some combination of the above? Okay. But the employee retention credit here potentially is $7,000 for each of the full-time employees, because 4 times 3 is 12. So they're going to cap out at the $10,000 per employee per month for the full-timers. I mean, per quarter, $10,000 per employee per quarter for the full-timers, right? And then we're going to take 70% of that. So that's a $7,000 max credit. There are 2 employees, and they get 2 quarters worth of credit, right? Because this is eligible for quarter 1 and 2 in 2021. So that's going to be 7 grand times 2, that's 14, times 2, that's 28. So we got 28,000 of ERC just for the full-timers. Then we're going to take the part-timers. In this case, we're going to take 2 grand times 6, 2 quarters times 3 months. There's 6 months in the 2 quarters, right? So that remaining 2 grand for the part-timers times 6, that's 12 grand. Then we're going to multiply that times 70%, and that is 8,400. Right? So now we're going to add the 28 grand and the 8,400. Our ERC credit, our employee retention credit for the same employer, $36,400. Do you see how this can be huge and help our churches this year? This ERC is going to be massive for us. Now, here in Virginia, we are still under a governmental order that limits our capacity at 50%. I cannot say when the governor will lift that, but I'm guessing that we're still going to be in that for sure for all of quarter 1 and probably for all of quarter 2, or at least a portion of quarter 2. So I think for those of us in Virginia, we have a really good shot at qualifying for this without even the gross receipts test. For those of you in Tennessee, you probably don't have quite as easy of a shot of qualifying for it. You're going to have to look more at the gross receipts test. And depending on your particular county And what happens? Then, we could see some government orders or may not. So you have to pay attention to your specific location. But this is going to help a lot of our churches. Remember that in 2021, you just need to be down 20% versus the corresponding quarter in 2019 or versus the preceding quarter. So it could be that quarter one is down 20% from quarter four, which is not all that uncommon if you got a quarter four bump. Auburn did not see the same quarter four bump that we usually do this year in 2020. So I know that a lot of churches are in that scenario, but some churches certainly do get a big bump. All right, so I hope this is helpful. Let me grab some questions. Looks like we do have a few. Do pastor salaries count in the ERC since they are self-employed? So Brian, pastors are not actually self-employed. This is one of those weird things, right? The IRS actually says that we are employees and we get a W-2. However, the Social Security Administration says that we are self-employed. So we actually have a dual status. We're the only profession out there that has this dual status where we're sort of this combination of employed and self-employed. But the good news is the IRS says that we are employees. And so, yes, pastor salaries do get to count in the ERC because we are employees and we get included on the 941 if the 941 is filed on that sort of top line number. So yes, Brian, pastor salaries do count. But again, you have to file a 941 to get the credit. So if the pastor, in your case, you're not the only employee, but I'm just emphasizing this again. If the pastor is the only employee, ERC probably will not help you because you're not filing a 941 in most cases. But for those of us that have any other employees at all, we're filing a 941, and pastor salaries will be included, assuming you're doing it the right way. So Anthony says ERC versus SSA deferral versus credit for FFCRA sick pay. Is this pick one, or can you be eligible for multiple? Anthony, you can be eligible for multiple as long as you don't double dip on the credits. So for example, if you have FFCRA credits, you cannot claim ERC credits for the same wages. But again, FFCRA is going to be, a maximum of 12 weeks, right? 2 weeks for one, 10 weeks for the other, potentially as the max. So you just don't double dip. That's the short answer. Payroll hours, first week of April, paid April 15th, qualifies. I thought so. So, Jeff, I'm not totally sure I understand your question, but I think your question relates to, is it around the pay date or is it around when the work occurred? I'm going to answer it as if that's your question. If it's not, then clarify in a follow-up question. The answer to that is it is around when the work occurred as we are talking about the government order, because it has to have impacted your business at the time of the event. So if you have a governmental order, for example, that says April 14, as we do here in Virginia for our churches, it's going to be the wages that correspond to that period. Now, that's a little bit in the weeds. Don't stress out as a church treasurer on this. Just 90% of you are going to have full-time employees max out at the 10 grand anyway. So don't overly sweat running a bunch of calculation if it maxes at the 10 grand anyway, right? So that's my advice on that. Don't overly sweat. Wages in 2020 for ERC had to be paid or accrued in the qualifying quarter, or any quarter qualifies for the whole year. So ERC is a quarter-by-quarter deal. PPP, you get to look at any quarter qualifying for the PPP. So two different scenarios there. I know it's confusing. We're talking about two different types of thing, right? So gross receipts, Jeff, are at 80%, which means you're down 20% is the answer there for ERC. Yep, y'all are right. Good strategy to use wages spread over the covered period to 60% of the total PPP, and then ERC for the balance. If you can use 40% for rent, etc. Sure, yeah. Again, you want to run your numbers, right? Not all of our churches, many of our churches have paid off buildings, and so you're not going to have rent, and you're not going to have mortgages either. Auburn, the church that I serve, is in that category, right? So we've got utilities that'll hit against that, but that's about it. So, yeah, we allocated our utilities that way. And then the rest, we went to payroll. So we did minimize the amount of payroll that we allocated to PPP so that we could maximize our ERC. So, and that's what you're getting at. Just make sure that your payroll is at least 60%. Curious what to do with QBO payroll entries to allocate money to ERC versus PPP versus no benefit. Jeff, that's a little beyond the scope of this class, but if you email me, I'll be happy to help you with that. Can you send the link for the short PPP forgiveness form? So, Lou, it is actually in your handouts. So if you download the handouts, it is actually included in that handouts. And so you can print it out straight off of that, and you will get your, yep. Nan is saying something that I was confused about for PPP1 may help anyone applying now. For forgiveness calculations, is salary or wages gross pay or net pay? It's gross. So good question. Yep, it's gross pay. All right, great question. I do want to talk briefly about the Form 7200. This can be signed by the church treasurer, and they're running about 2 to 3 weeks on these. And you can file this Form 7200 for advance payment of the FFCRA credits we already mentioned, but you can also file this for advance payment of the ERC credits. So if your church is in a cash flow crunch situation, then you can use this Form 7200 again and get an advance payment of the credit that exceeds the amount of your payroll tax deposit. And then, of course, don't make the payroll tax deposit. So that is going to be helpful to some of you. Again, you're going to use a fourth quarter 941. If you haven't filed it yet, you can put your ERC for the whole year on that fourth quarter 941, assuming that you had a PPP loan and you now are going back and filing for ERC because that was opened up in the law. If you have already filed it, then you're going to need to file a 941X. And in that case, you have to go back to the specific quarters and file a 941X for the specific quarters. Checks on these are running about 2 to 3 weeks for refunds from the IRS when I e-file a 941. I always recommend e-filing a 941. However, I know that the majority of our churches are not e-filing, you're paper filing. And if you paper file, then it's 2 to 3 weeks from when the IRS processes it. And the mail is running crazy right now. One of my church members works for the county and in their property tax department. And she told me yesterday that they got mail yesterday that was postmarked December 3rd. Now, I hope your location is running better. We have actually not sent out our giving statements for 2020 yet. We normally have done that by now. We have not sent those out yet because we are still receiving checks that are postmarked by mail prior to December 31. And so we're holding off, and it's impacting our ability to even close our books, which at Auburn we have normally done by now. So, this is a challenge with the Postal Service, but the IRS is sending these checks within 2 to 3 weeks from when they process it. So that's the best I can tell you on that. Shannon is saying, if a child care facility uses your EIN but acts as a separate entity, do you have to include their income in a quarterly comparison? The answer is yes. If they're on your EIN, then they are you from a tax perspective. All right. Will we be able to download the handouts once this session ends, or should I do it now? You need to do it now. Wayne says, it appears in Georgia that there was never a government order. Can we even use any of the ERC? So Wayne, if you don't have a government order, then you are going to qualify by gross receipts, possibly. And if you don't qualify by government order or gross receipts, then you don't get the ERC. So hate to be the bearer of bad news there, but the good news is in 2021, the gross receipts test is a little bit easier to hit, so you might hit it versus the corresponding previous quarter or versus a quarter in 2019. So maybe that helps, maybe it doesn't. All right, with that, we're going to go ahead and end today's session. I want to thank you so much for being here, and on behalf of the conference on finance or the Council on Finance and Administration for the Holston Annual Conference, we thank you so much for what you do for your churches. I know we have several pastors on this, but I also know that we have several business administrators with us today, and we also have several volunteer church treasurers with us today. And I just want to say we appreciate the work that you're doing. We know that it has been a stressful year. And, we're not done with that yet. We still got a little stress on us, right? We're not totally through COVID yet. And it's been hard, but God is good and God is faithful and God will continue to be faithful. And we are blessed in so many ways. And we have an opportunity to avail ourselves of some help from the government that is going to really help our churches. And I appreciate you caring enough to take the time to be here today to learn how you can help your churches. Take care, everyone. God bless.